Amit joining us. He's Senior Vice President and Fund Manager at ICICI Securities PMS. Amit, good to have you with us. Let's just start with names like what we were discussing, BHEL, but then there's also Oil India, there's NTPC, there's GAIL, there's there's ONGC, SAIL. It's PSUs once again. So just wanted to understand what you like in this space, and maybe if you can begin with a comment on BHEL. There are those like Kotak Equities who believe that it's very tough to justify any kind of scenario, but there are others, of course, who are willing to back the story. So your thoughts, Amit?
No, you're right. So regarding the valuations, so if you see BHEL, it is richly valued because the order book positioning has to be converted into the revenues also. If you see the last 3 years of BHEL, 60,000, 55,000 crore order book, but now it has gone to exceeded almost 1.5 lakh crore, and I think this is where the growth is coming. And I think another important part is that they are diversifying the order book also. I think by financial year 26, more than 30% of the order book is going towards the other segments. So until they are coming out with some particular guns for the warships, it's a different ball game now. They have also gone into consortium with Titagarh wagon for the railway wagons, and that is how they are diversifying. And for the core order book position, which comes from thermal, I think there is a game changeover. I mean, right now completely, because the thermal capex from 2015 till 2022, it was a degrowing, -1% CAGR, and that is now expected to grow by 20% in another 4 or 5 years because the power demand is getting higher. So we have seen it that the power demand is almost compounding by 9-10%, which used to be 2.5% actually before. And this is where I think the requirement, the order book positioning of this company is going to increase. The valuations will become better when it is getting converted into the revenues also going forward. And the previous orders which had a low margin impact, I think that is also getting over. So overall, the situation is better now for this company.
Okay, that's BHEL doing quite well in trade today. Power space. I mean, actually, power stocks themselves, they've had a pretty good fresh purchase to buy at current levels. Does that make sense?
I think see, if you look at the overall PSU space right now, from 2010 till 2017, it used to be at a discount of 31%, 68% discount. Now it has recovered to 48%. And I think from 48 going back to 31%, it will take another years now. But the important point is that 2010 till 2017 decision making, and there was a problem of no more capex even from the side. But all these three things are changing now. And that is where you cannot have that kind of index. So even while reaching to 31% discount, I think there may be room. You see the corrections in the market. In between, you see stocks also declining, but the money flow is very robust. In fact, if you look at the FI holdings in some of the of IRFC, which has seen a good move, hardly 1% holding FIs have that move. They have 30% around in certain stocks, 15%, but in many stocks, they have 1%. This is where FII flows also are waiting for declines in the market. From 2022, whenever Nifty has declined, FIIs have poured in money. Whenever Nifty has reached to 5-year, 10-year average valuation money, the same thing they are looking for certain stocks where the sectoral tailwinds are getting strong.
Hi, Amit. Good afternoon. Good to see you. And Amit, there was a CLSA note that came in earlier today. They were saying on ferrous names they're not too positive, but they like the miners, coking coal miners. And NMDC is something that you're quite positive on. They've been showing good volume growth, and pricing in this quarter will be even better than last quarter. Your view on the stock, added on this 240 rupees odd?
So I think mining is coming out after almost years of lull period. I still remember that there was a meeting of the minerals minister, and it was asked actually by the prime minister, that which are the critical minerals and where we can get. So all of these things were coming out, and then we started seeing that if you see the volume impact on some of the mining companies like NMDC, as you mentioned, in iron ore, done 35 million ton. but now this fiscal year is going to have 46 million ton of volume. And I think in the coming 2 years, they may have 55 million ton, the thing which was very high level. And this is what going to be seen in the stock prices also. And these are not very richly valued. They are still 8-9 times valued stocks. I understand some stocks like manganese ore, they have become more richly valued, but NMDC still have a lot of steam, I think, in valuations.
What about hotels? They've had a pretty good run led by robust demand, pickup in travel and tourism. But can we expect, some more PE re-rating? While the earnings growth may continue to look, upbeat from here on, what about PE re-rating? What kind of an investment hotels be if you put in at current valuations?
So see, PE re-rating happens when, some consolidation happens in the sector. You see that more, price-wise, you have more something, the demand is higher, the supply is lesser. And this is a clear 5% gap actually in the hotel space right now, because the demand is growing by 10%, supply is around 5%. I think another 3-4 years it will take to catch up that particular thing, and consolidation is happening. And I think if you look at the room rates also, so yes, we have seen the increase in the room rates also. Annualized room rates, average room rates have increased by almost 12-13%. The occupancy pre-pandemic, which we used to see around 60%, it has gone closer to now 69.5%. So obviously, if any company has some debt also, it will also perform in the hotel space. That is clearly what we are seeing. For example, Lemon Tree, which has some debt, but it will be paid off if you are increasing the room rates and the people are moving out for the hotels. In fact, also, the corporates also are moving out, whether pan-India or outside, and that is also leading to a leverage actually for the hotels. Good scenario. Domestic tourism also can pick up going forward more. That will also a positive scenario when there is a demand-supply mismatch. So I think it's a good platform for hotels after the long period of time before, and I think it should continue. Yes, sometimes valuations become very richly valued. You have to wait for your turn. It's possible 1 or 2 quarters they may spend time, valuations become attractive, then you can start. See, last 1 year, it has spent a lot of time, and I think that again the stock is started.
All right. Just 2 names I want to put up. Medanta, if you can have the intraday up, it's down. Medanta, sorry, beg your pardon, the hospital company. And there you go, that's the one. And then look at Rainbow, which is the children's hospital. 1210. There was some hospital, children's hospital. Some of what the court had suggested in terms of standard procedure for standard rates for procedures will not apply. But that was also seeing a sharp comment. Amit, have you looked at any of the hospital companies which have corrected?
So hospitals, because it is also the beneficiary of unorganized to organized. I think if you look at before the Manipal deal, we had 18 times EV by EBITDA for the industry, and then it moved to 20. And then we started seeing that many hospitals started coming for the IPOs. I think when you see many IPOs coming, obviously it's a sign that they want to cash up on this higher, the valuation in the sector, and that is where some more consolidation is possible for the coming quarters in this space before the next phase of move.
Okay, all right, Amit, we'll leave it there. Thank you very much for on CNBC TV18. 40 points higher is what the Nifty is.